Q1 earnings of IT sector have been marred by the ramp downs, on account of which the revenue execution has been weak. The other trend that we have spotted is the reduction in the headcount and the fact that the companies had to delay, defer, or at least cut down on increments as well. The deal pipeline actually has been quite strong. Deal wins across the board, the numbers have been quite substantial, but nonetheless the managements are non-committal about recovery. They are not talking about whether there will be a recovery in H2 or not. Let me substantiate all of this with numbers as well. First up, let's take a look of how the constant currency growth has been on a sequential basis for a lot of these companies. And there you have it from the likes of Persistent, Coforge, Zensar, etc. When we're used to seeing a growth of anywhere between 5 to 7-8% in the earlier quarters, that has scaled down to sub 5%, 2 to 5% range. And if you look at the other heavyweights, Infosys, TCS, LTI Mindtree, HCL, Wipro, they've actually reported a decline there. LTTS declining by as much as 3%. So the pace of revenue growth has definitely slowed, because remember, even the large cap IT companies were at least growing to the tune of 2 to 4% per quarter. So substantial reduction there. Similarly, if you look at the trend of the headcount as well, a lot of companies have actually reported a headcount decline. If you look at the total, 12 to 15 companies that have reported numbers, more than half has actually reported a decline. Let's go to the next slide, please, because that will tell you that the likes of Wipro, etc. have taken a headcount decline of as much as 9,000 employees, Infosys 7,000, even the other larger ones have taken a sizable hit. Not just that, going forward as well, they are non-committal about recovery. If you look at Coforge, L&T Tech, HCL Tech, Mastech, they've tried to maintain their guidance, though there's a bit of disbelief when it comes to HCL Tech, whether they'll maintain their 6 to 8% guidance. L&T Tech is very confident about recovery in the second half. Infosys, of course, has slashed that guidance by a whole lot. LTI Mindtree is saying that double-digit growth is challenging. TCS has pretty much said that they're looking at 8 to 10% growth, and Wipro too has given a very weak outlook as far as Q3 is concerned, telling you that there is quite a bit of reduction as far as overall growth is concerned, and that's quite evident by the commentary as well. Double digit is a tall ask, double digit is challenging, delay in discretionary spend, growth may pick up, they are not committing about it, and deal executions have been pushed to FY24 end. All of this has been the flavor as far as Q1 FY24 earnings are concerned. Having said all of that, the deal win isn't really bad. That's telling you that still deal signings are happening. So on a quarter-on-quarter basis, Coforge has reported a big bump up in terms of deal wins. Mphasis nearly doubled their deal wins. The others also have reported a decent number. Of course, for the likes of HCL, Wipro, there has been timing issue, and there we have seen a bit of a reduction. And Persistent also said that there was delay in decision making, but deal wins by and large have been all right. And all of that brings me down to the valuations, because if you look at the valuations versus the 5-year average, they are at par or slightly higher than the 5-year averages. But if you compare it with the 10-year averages, there's still some room up, upside available as far as valuation is concerned. So overall, the valuations are ripe in the sense that they are close to the historic averages, but of course meaningfully off the highs that we had seen during the COVID times. So for IT sector, glass half full or glass half empty.